Here we are live right now in that climactic move. These lows are cooking, 553 lows and 4 highs. And once again, there it is, that big overbought process with that sell short OMMT. Now, I know I gave you limit orders earlier in the day, right around 580.75, 577.5, somewhere in there. They could sell this baby down. They just sell that baby down, let that short work. This is what happens in exhaustion highs, MMTs, and why these short side, when everyone piles in, like any real bull market, every bull stock has to have a bull shakeout. And you have to be on that side of it. We went through this. It happened on day 3. Here it is right now, 10:51 a.m. Pacific Standard Time. Date MMT 3/15/2012. Honk honk. As we make these lower lows, we're going to come down into that pricing channel. Once we get into the pricing channel, then we're going to figure out where to get that low. That low. I had given those bids way down below that market MMT. You're here, you're now, you're live. Go ahead and update me. If you got the limit order out there, tell me which limit order it is and at what delta. That's the part I need to know.
And that's just below 7.8.
That's when I was away from the computer, but there's going to be other support levels. You don't see that unless you can break below 577.50, Mr. Gibson. Look at him, tank it, Mr. Gibson. When people pile in and get exuberant, it must do this. Yesterday was $19. Let's see if we can go $40 down. That would be quite nice. As that bull gets taken out, that's the drop. That's the bottom, 581.44. He's going to come down. He's going to make that pass. This is now. This is live. What do you see there, Mr. Gibson? I got a low, and that ECN's popping in. I'm going to go ahead and get me about some shares down there below where that low is, and I'm going to get in that delta tree is bid popping right there in that bid NAS. That's that dollar ratio off of 581.44 to the bid at 582.59. Look at that. Look at that. He came up. He's bid popping that. Look at that ask. Now, they're not crossing that market. Yeah, he came back below it. There it is. There's that run. Let's see what happens with it. I'm watching that Google trade as well out of the side of my eye. I'm watching that $600 call that went up to 985 just get taken to the woodshed. So the people that were in these calls, well, they're not owning so much because they never know when to sell. 64,000 contracts of that 317. That's the monthly expiration we're in right now. And it's a Thursday. And we have a bottom at 581.44, and we're going to roll back over, and we're going to find out exactly where that support level is, and it's here, it's live, and it's now, MMTs. And once again, buying that lower end dip, 600 was the high. That's what, 18 or some odd dollars that you could have had? Look at that range. That's exhaustion bull highs. And let this be the primary example that when you're in the MMT school, you will have to learn that the higher the risk for the bull has to have pullbacks to support levels. And then you buy them and you sell them from there. And that's what you're going to work on right now, MMT. Put that bid out at 581.82 pennies. That's a dollar below that current bid and ask. And let's see if he comes down and holds that hook. Live. I've got a bottom right now on this Apple computer. What a great short shakedown. Look at that. Bam. Look at that right up here at that 591 drop. That was where the biggest part of that drop dropped right now here intraday. That meant that everything that we've been telling people, everything on stockmarketfunding.com is know how to sell that high and buy back at that low of 581.22 on that low. And here we are. We got a $2 ratio. We're making that low. I can show you right now. That bar there is a diamond bot. I'm going to start buying down here right now. That's my limit order. I'm going to move in before it gets too many teenies away. You got $1.21 per teeny. Don't let it go the full 3. You got to get in right down in here and start scaling in the bottom. And that's now, and that's live, and that's that entry. You got $1.21 per teeny. You've got a hook shot right here, $1.21 advance. It's live. That's that diamond reversal. That's that turn on that apple. Look at that. 1, 2, 3, 4, 5 teenies right there. Bam. That's from this reversal. The upper end of that reversal, which is this teeny line up here, down to this bottom right here, and you hit that 2 teeny, and you can scale it right in here now, because that diamond holds support. And as long as the candles are not closing below that low diamond, well, you're good to start, hitting the little dips there. That means you don't buy a lot. I didn't say you go out and buy 500 shares. No. Just try 25 shares on the entries and make sure that you go up, but you come down, but the body stays above the diamond. That's how you get the entry. But take the light entry, take the light road. You don't have to get real aggressive. It's short, it's only that much off of the bottom right now. It's $2 ratio as it should be. 2.00 ratio. Intraday low to the bid. Intraday low to the bid. Ask. Intraday low. That's that print. It's here. It's now. It's actually turned MMT. I'm going to lift up the hood here. Here's that half bar right here, MMT. I got 583.06. That's number one. I've got a weak IR though. Look, I'm printing at 11. That's weak. That's a 32.43. So now I can see that diamond down in here, I could take a very small amount of risk right here at the teeny line. And it has to maintain a close above that for the long side, for the dip that is. But you better have a quick stop, because you can still print down another 3 to 5 teenies below these lows, because like I said, this is what we say that to you in price action. This is what we tell you in price action. Sliding that bid, look at that reversal. Look at them go down. Look at that bottom. It's live. There's that diamond. Here's that low. Now, because it's so weak, your risk-reward ratio is high right here, only because that IR is only at 6. It's not reversing. That's 0.38. That's negative ratio going towards 0.43 right here. So the bottom is real weak, and if you are hit, we could just limit out right in here. If you got hit down here in the wick, right here, see, because this diamond has to hold support. And it's live, and it's showing you now, and it did not. See how it come down and broke it? That's where your stop market is. You can't be breaking that low. So we can still go lower. That's why you keep that stop. Now listen, it's at 0. And when you go to 0, look at here. Look at that high ratio. It's 46, 44, right here where that pointer is in the black area. Take a look. And look at here. You're struggling, and you're making a series of lower lows. And that's live in Apple right there. And here's that price that we talked about. We're going to get down here to $20 reversal. $20 reversal live. If this isn't what you wanted, tell me what was. And let me tell you another thing. Price exhaustions, whether they're manipulated by high frequency, when people get up there at those highs, they get woodshedded. Cancel that 577.75. Cancel that. Go down to my 572.50 area. 572.50 on that bid with a 579.37 short in progress. A short low. Once again, you hit a bottom. Let's see how he comes back in it. You have a total of 731 highs, but let us not forget the last 3 previous days, you had the 700 high count over here, and where it says highs, these were 700. So now you got your first counter 700 mount intraday lows on that short reversal. Bull price exhaustion. Once again, it's about the bull price exhaustion and sticking with it. Imbalanced markets. Natural buyers and sellers versus high-frequency models. High-frequency models do work at some point, and we're right here hitting that low, and this is live, MMT. If you have any questions, you can ask me now. You got down here at that 579.37. There it is, down 9 handles, $387 million negative money flow, printing 88 million. Look at that. So we've been watching some of the money flows in the overbought processes on price exhaustion. And how you can keep making lows 740. Whoa, look at that MMT. Look at that MMT. Let them rip that baby right down there to that 572 off of that live high 600. I can tell you what, it's here. It's now. It's not fake. Look at that. Here you go. Look at that lows. Those lows right there. 578.55. 766. 766 lows intraday. But look, MMT, we can get down to my other lows at that 572.50. Mr. Gibson, I did tell you that 572.50 area to get back down there. Watch that 577.75 area. Let's see if we can come down to that first pass at that 577.75 support area. Here we are right now. We're popping off of that low. You can currently see that. We had that low. It's right here in this video. The time is 11:06 a.m. Pacific Standard Time, 3/15/2012. We are so happy to have you here with us, MMTs, as that low process. That's the kind of shakedown that needs to happen in overbought stocks. Now, I will show the group that once again the Apple trade needed to do this. And on this daily chart, we could clearly see a display of the third day. So here was the first day gap, that was the second, and that was the extreme. That's always on the third day, MMT. And that's where that exhaustion sell gap finally hit, that upper end. Like we had an MMT said he nailed the price target 600. He was only a penny off. Went to 600 1 penny, went 1 penny above him. But that was that final gap, daily gap sequence here live, MMT. And once again, this is what happens in overbought exhaustions. Exuberance is exuberance, and you're looking for that daily bar today from that top down to this support level. Now, remember, all of this is only done intraday, and all it is that when you shorten up here and buying down here, you have to buy it back and you get the bounce. You make a lot of money when it came down to 578. You go long off the bottoms. It's done right now. That's that lower bid. It's going to hold. So you need a 579.70 bid on a pullback for another live entry on this one. And selling into the resistance, here's how it bounced. Here's how Apple actually bounces in this 3-minute, 6-minute bar. So here is the 6-minute bar. That was the peak. This double diamond, you're coming right up to it, and you cleared it here. So that is a reversal. What you would look for, though, because of the kind of reversal it is, intraday, is that you would come right back down into the pocket and you would test this half bar, and that's at 580.40. 580.40. And that's the half bar. So you can clearly see the reversal bar right here was $2.98. This bar right here, believe it or not, was $3.70. And this 3-minute bar right here is working on 76 pennies and continuing on a 369 reversal. Apple intraday.